Hello, everyone, and thanks for joining us today. I'm Craig Ramsey, and this is the first installment of ACI's real-time in real-life video series that I'm thrilled to be joined by three leaders in the industry to discuss the evolution of real-time payments in the United States and the impact that we can expect to see. Let me introduce Connie Theien from the Federal Reserve, Elena Whisler from the Clearinghouse, and Laura Weinflash from Early Warning. So with that fantastic panel, I want to dig straight in. What's the most interesting use cases that you're currently seeing running on your network?
We kind of have four categories and we see exciting use cases in each of those. So first one being B2C type expedited payroll, earned wages, refunds, rebates. Really the last year and a half, 2 years has accelerated the trend of being paid once you're done your work or at the end of a shift or when you finished an Uber drive, for example. And so we really see transforming how being paid lets individuals continue on with their daily lives. And that's quite exciting. And we've seen payroll processors step up and really transform their business processes to support such a shift. It's quite exciting to see that. And I think that'll continue to grow significantly in the RTP network and in the US. We do see P2P activity via Zelle, and we're really excited about that interconnection and partnership. And we also see P2P activity through digital wallets. So here in the US, digital wallets continue to proliferate and to be a needed mechanism for different segments of the population. And as money moves into and out of those wallets, the RTP network is there to facilitate that transfer in real time.
In the US, Zelle enabled just during the second quarter of this year, 436 million transactions valued over at $120 billion. One of our fastest growing and most interesting use cases is in small businesses. We've seen 157% year over year growth from small businesses. They love the fact that payments are instant, secure, and tied directly to their business checking account. Where money just appears immediately. So they can finish a job, they can get paid right there on the spot, and they can see that money appear in their bank account immediately.
So how will FedNow differentiate its services from those already offered in the market by the Clearinghouse and Early Warning?
When I think about how the Federal Reserve's FedNow service will add value, the very top of mind thing is reach. There are 10,000 financial institutions in the US. A good 40% or more of those, when you think about retail payments, transact directly with the Federal Reserve to support their ACH services. And so it's a big opportunity for the Fed to add value in onboarding thousands of financial institutions. Beyond that, I think our participation, can really support innovation and efficiency in the industry. Certainly having competition and multiple networks, delivering these kind of capabilities is good overall for industry innovation and efficiency. So there's some benefit there. Last, I think it's important to note from a safety, resiliency, security perspective, again, having redundancy, multiple providers and infrastructures in the market contributes to a higher level of safety and resiliency. And the Fed, as a provider does, bring a lot of assurance and confidence to the marketplace with our participation.
Does having the three schemes in the market, does that actually confuse the market? Does it mean that all banks need to connect to all three schemes, for example?
Yeah, so what we believe fundamentally is each institution within the US has their own business priorities when it comes to real time and executing real-time payments. Many are taking advantage of that on the RTP network today and providing a competitive advantage to their customers. Some will join more than one network, so some will join FedNow and the RTP network if they see a business benefit to that. So for us, I think no one size fits all for this answer. And what we try to make sure is that there is business value and value add amongst either interoperating or interconnecting different networks. So additionally, between Zelle and the RTP network, we are interconnected in some cases at some banks. And so some financial institutions are sending Zelle payments and they settle over the RTP network. And the goal there is just providing business benefit to those institutions to either reduce risk, reduce operational changes, and creating a truly real-time environment for all participants. So that's a bit the heart of what we look at for either interoperability or alignment with other networks here in the US.
First of all, from an early warning perspective from Zelle, our objective was really to solve a customer pain point, like looking at being able to take money out of your bank account and see that your friend or that business is getting paid in real time. So the first objective was to create ubiquity and really focusing on making it easy for consumers and businesses to pay from their bank accounts, or if you bank with a credit union, your share draft in the US, and pay others and just seamlessly make it happen. And what early warning does behind the scenes is we leverage different networks to get the money moving from point A to point B. And we've been doing that since the beginning of time.
In the 2021 ACI Primetime for Real-Time report, we called the US as one of the major markets that was going to see the highest growth of real-time payments anywhere in the world. So in your opinion, what needs to happen for adoption to further accelerate in the US?
So when I hear that question, for me, I think back to what is the tipping point? Where are we where it's going to accelerate versus what we've seen in terms of growing a network over time and organically growing that? I'll kind of take the example of Netflix and how that's changed the video rental business. You know, for a lot of people, I don't think they realized when the tipping point was until Blockbuster filed for Chapter 11. So I equate that into payments in the real-time payment network. And I think, you know, this year and early into next year, we are starting to see those large shifts in behavior for both the consumers and the businesses. You know, the earned payroll example on the RTP network is really a massive shift in how employers as well as employees think about how they need to pay their employees. And that in itself is then allowing for businesses to rethink other cases of paying bills or invoices and managing that like conversational commerce that we really need in the payment space. So for us, I see today is that tipping point, knowing tomorrow will continue the behaviors that we've put in place over the last year and a half or 2 years.
The pandemic itself has been a very big tipping point in terms of both consumer behavior, but also business motivation to look at modernizing their payment processes and services. I think the second order is really collaborating across the industry to solve and deliver solutions that support businesses' more complex needs. Really, for businesses to adopt these services, they need services that will support their end-to-end processes for invoicing, payment, remittance, reconciliation. And, you know, some of those sort of shoulder processes around the payments are really the things that have been barriers to them adopting electronics. So I think if we as industry can really focus on more holistic solutions, it can be the tipping point for business adoption of instant payments.
Fantastic. Well, as I say, that brings us to the conclusion of our video today. And thank you very much for joining us. Firstly, big thank you to my panel, Elena, Connie, and Laura. Thank you for taking the time and giving us such valuable insights. And we're looking forward to seeing how real-time continues to evolve both in the US and globally. I think you'll all agree the US market is very well placed to capitalize on this new phenomenon. Thanks very much. Bye-bye.